What's up?
No, we've got a bunch of the team there. So we've got an office in New York. My co-founder Sid is in New York for this week. So we've got more than enough of a presence, and someone has to do some work. So
Holding down the fort.
I heard Sid's
exactly.
talk, actually. Yeah. I listened to his talk at Permissionless.
Good. Yeah.
Okay, that's amazing. So Sid's at Permissionless giving talks. Next week will be ECC.
Mm-hmm.
Um, we want to introduce real quick our Summit Digest to our audience. Really cool tool for these conferences to give you a bit of a digest. Daniel, you were going to share the screen on that.
Yeah.
Yeah.
We just posted this like around 10, 15 minutes ago. Let me share my screen real quick. Um, yeah, the Summit Digest is basically
Is Sid on there?
the idea. Here it is. Yeah, the idea is to kind of just like at these events. So our inaugural Summit Digest is covering this Redefine Tomorrow event by also by Bloomberg and SCB 10X. And yeah, it just goes over all of the different talks. Some of these are not like, some of them are not easily posted on YouTube, or sometimes they're like staggering the distribution of the talks, so you can access them all right here. And then more importantly, you can actually like just click on one, and if you don't have time to listen to it, which is like a lot of people, staying busy, you can just access the key takeaways right here. Just have a 5-minute read instead of listening to a 30-40 plus minute pod, and three main bullet points right here for every talk. This one for Redefine Tomorrow must have I don't know, like 30 talks. So yeah, it has notes for 30 different panels. You have Pudgy Penguins abstract chain right here, Hasib. So yeah, good stuff. I think we'll be doing, I guess we'll do permissionless next probably. It's wrapping up today, and then that will be the next one to add to the list. Right now, you can check it out. We'll put the link out in the live stream comments, I guess. And yeah, you can check out the first one on Redefine Tomorrow.
Awesome. This is amazing. Man, I'm going to ECC next week, but with this, maybe I don't have to go anymore. I don't know. Nah, it should still be fun to meet people live, but awesome tool. This is going to be great. Cool. Let's kick off the show proper. I want to welcome everyone to new Market Cap episode. So, Market Cap is where funds, founders, and analysts provide their insight on the latest markets developments with you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator. I'm Stefano. I'm the Director of Institutional Services at Alea Research. And with me, I have Daniel, our BD Research Lead, Darren, our analyst and panel contributor. And of course, we're joined by Joe from Maple, co founder and executive chairman. Um, Maple is, of course, an on chain marketplace. Institutional and individual accredited investors only. You provide them with loans. And you crossed, I believe, 1 billion TVL 2 months ago, 2 billion this month.
Yeah.
No, 2 billion this month, and 1 million in monthly revenue as well. So that's a pretty steep ramp up. Joe, first off, welcome on the show. But please provide us the insights from your side. Like, how has it been to manage Maple, um, and scaling it at this accelerating pace? Joe, I think you're muted. Hmm.
Still muted.
Still muted. What's going on? Maybe you can try to change the microphone setting.
I think the sheer scale of the ramp up in TVL and revenue, it's killed our system and microphone. So I'm sorry, audience. It's just not used to that type of volume and traffic for such a great DeFi protocol, I think.
Is that better now?
Yes.
Yeah.
There we go. There we go.
It was my microphone. Sorry. Okay, so yeah, just to clarify on Maple is so Maple asset management on chain, and so now with this scale, we've now grown to be the second largest asset manager on chain. There's only two asset managers that manage more than $1 billion on chain, so that's Maple and BlackRock. And our focus, as you rightly pointed out, is on lending and credit within that, and so the ramp up and where a lot of our traction has come throughout the first half of this year has been our new product that we launched in the middle of last year, Syrup USD. And that's where we're taking institutional loans that are providing the underlying source of consistent quality yield and enabling broader permissionless access to that. And so Syrup USDC and Syrup USDT are now integrated throughout the broader crypto economy. So you can see it on Pendle markets, Morpho markets, you can get it from OKX Web3 wallet, from Binance Web3 wallet. It's now one of the core yield assets that's powering the DeFi ecosystem. So if you think about it, there's three main yield quality assets that exist. There's Maker and everything that exists around the Maker ecosystem. There's the basis trade and effectively Athena. And now there's Syrup USD. And that's where we're getting the quality yield from institutional loans that are providing that are over collateralized by digital assets. So this is Bitcoin, ETH, Sol are the collateral on USDC and USDT loans.
I noticed Syrup USD coming online. I noticed it on different platforms, and yeah, that's a very interesting move. Can you provide a little bit more insight how you guys came to that decision? Like, how did that development come about?
Yeah, so it was the middle of last year. We launched Syrup USD, and it was done a little bit differently back then because we it was in a very and we'll get into this, I'm sure, later in the show, in a very different political and compliance environment. And so we launched it as an entirely separate application. So you had Maple, which is our accredited investor, institutional only platform over here. And then you had SyrupFi, which was permissionless and available to the broader DeFi ecosystem. What we did recently, about a month ago, is that we brought all of that together back under the Maple umbrella, and that's purely as a result of the changes in the regulatory environment and the fact that we didn't have to worry about having permissionless and permission protocols sitting separately, and so that they were there was no capital touching each other, but now bring it all back under the Maple umbrella. And so Maple now is an asset manager. Within that, we manage Syrup USD and more assets to come in the future within the DeFi ecosystem. And then we do have then our institutional product, which is available in the US only for accredited investors, full KYC and permissioned. So they're the kind of two segments of our business that sit under the Maple umbrella.
Gotcha.
Right. Yeah, you guys consolidated. Yeah, kind of for a little while it was like maybe a little bit confusing for people that weren't like familiar, new people, yeah, who hadn't used Maple before. Yeah, obviously you have Syrup USD. You're gonna have like these people, like permissionless, right, stablecoin, who they don't have to know everything about Maple to use the product, and then you can definitely consolidate. I think you've even you saw Morpho kind of for a different reason, but you saw Morpho kind of also like consolidate their structure a bit too. I think that was more for like token value accrual reasons. So maybe not exactly the same, but it kind of comes from like a similar place. So like regulatory, I guess comfort doing this kind of stuff. Yeah, with the positive state of regulations. So yeah, good to see. And I think it was good to touch on, the advent of Syrup USDC and Syrup USDT. I think I recall your partner and co-founder Sid. He said something along the lines of like Syrup USD is like it's like e-commerce, and then the way you guys were doing it before is like brick and mortar. I thought that was like a really good analogy for sourcing the keeping like the bread and butter, the institutional lending, but then sourcing the liquidity in the decentralized fashion, just opening up more avenues that were not open before, and really like enabling that TVL growth that you guys have seen over the past several months.
Yeah, exactly. And because we been building for a long time. Maple was founded over 6 years ago now, and so that core yield generation engine, which is having all the relationships with the institutional borrowers, having all the smart contracts set up, having all the legal infrastructure in place, all of that has been built out over a long period of time. Now, what we're doing is wrapping that in a DeFi asset and deploying it into the DeFi ecosystem, making it broadly available for people to access the yield, and then for new financial products to be built on top of it, right? The composability of DeFi being leveraged and shown probably in its beauty and the way that it's able to scale. Like Maple Syrup USDC has gone from $0 this time last year to now it's got close to $900 million deposited, and is now the third largest yield-bearing dollar asset. So it shows you the ability of DeFi assets to scale. And I think it also shows the benefit of the quality differentiated yield that Maple is generating overall. The relationships we have, the institutional loans that are powering this yield to then supply it into the DeFi ecosystem and enable other protocols, other founders, traders, and others to be able to leverage the benefits across the DeFi ecosystem.
Right. I guess I'll add one last thing. Yeah, but before we can talk more about Maple later on as well. But it's like you guys are also expanding not just on on the decentralized side, but on the institutional side as well. Like making more key partnerships there. Like you had the Cantor Fitzgerald partnership that was like a big one, right, alongside I think Falcon X, right? So it's like that dual, like expanding in both realms. And I think it's something that people want. Well, I guess when it comes to like the Syrup token or the protocol itself, is something that people like to see. Is like, you have revenues, like revenue generating. You have the growth is great, the fundamentals are great, but you also have that institutional connection, and you're kind of like it's a way to express that. If you think the institutional lending landscape or just institutional involvement in crypto in general is going to improve, then like, okay, maybe keep your eyes on Maple.
Yeah, exactly. And to your point, it's that we sit at the confluence of DeFi and traditional markets. And so we have capital coming in from Maker and Sky ecosystem through Spark liquidity layer, right? Hundreds of millions of dollars there. And we have a partnership and we're accessing capital from Cantor Fitzgerald. So there's not really many plays within the DeFi ecosystem that have this more sophisticated institutional presence. And that's what we pride ourselves on. And that we want to be I don't like the term bridge, but the relayer between DeFi markets and creating institutional products through institutional partnerships to be deployed throughout the DeFi ecosystem. And so that rather than getting a lot of very speculative assets that are getting deployed throughout the DeFi ecosystem, we're providing something that's sustainable, quality, and repeatable and scalable into the ecosystem that then new things can be built on top of. And so unless you have these really core solid yield primitives, then it's a very bad foundation for DeFi to be built on top of. And so that's what we're really proud of building, is something that's not just great for the Maple ecosystem, but great for the entire DeFi ecosystem.
It's amazing how much the DeFi ecosystem has changed. I mean, it wasn't too far long ago. We had such a big fallout from FTX, collapse of Luna, all these problems with, OGs losing all their stack with Celsius and some of these other firms. And how would you say it's been like navigating this sort of big evolution that we're seeing in DeFi, where actually we might have like much better fundamentals to lay all this groundwork on, but still people are praying, myself included, for this fabled DeFi renaissance? And do you think we're far from it?
Yes, I mean the chart brings back some past traumas, but I mean to give a quick overview of Maple through this period is that Maple was around and did very well in the last cycle, and you can kind of see us growing into Q4 on your chart, and we grew to nearly $1 billion in TBL. We never quite hit $1 billion. And then post FTX, we went all the way down to $15 million. And so we had to rebuild the business almost entirely. And we've scaled that back up to where we are sitting today at nearly $2.5 billion. But in terms of your question, I think we're starting to see the DeFi renaissance, if you like. It's just maybe a bit slower, which I think is a good thing overall. If you remember last time, the amount of capital that flooded into the space came in so quickly and in such large size is what created the problem overall. And so you had a zero rate environment in the TradFi world and a 10% plus yield environment in the crypto world, which led through all of the Celsius, BlockFi, Voyager, bringing all of that capital into the crypto ecosystem through retail rails, and then with nowhere to actually deploy it, like a much less sophisticated crypto ecosystem with fewer players, no real institutional scale. And so then you got this overextension of credit. And so that's what caused the last cycle blow up, is that you had very few parties that could take down that size of capital, and you had too much capital coming into the ecosystem. I think the great thing here, as you can see in this chart, is it's slowly scaling up, right? It's not this like big whammo of retail capital coming in. And I would say overall that majority of the lending, nearly 90+% of the lending that you see here is over collateralized lending, versus last cycle, majority of it was unsecured lending. And so that's the big difference here. And so I think that enables a more mature market to evolve on the credit side through time, but also maybe points to where we are at in the cycle overall. Like there's just not that much leverage in the system. There's actually not that much risk on. And the cycle
You were breaking up a little bit towards the end, but I think you were making a point that there's less leverage in the system, less risk on. So we're seeing a very different environment right now. I also wanted to ask you something about what you touched on a little bit earlier. You said you, together with BlackRock's Biddle, are the only on-chain markets for this. So is that how you guys differ from most of the other players we see on these charts?
Yeah, so you can see that the big players here, Tether, Galaxy, Coinbase, Ledin, they're all CeFi players. So they're not doing any of their lending through smart contract technology. And so the big differentiator of Maple is that all of our lending activity happens end to end through smart contracts. And so the capital gets aggregated, the capital gets deployed, the loans get repaid, enabling full real-time transparency into where the loans are allocated, when are interest payments due, what is the performance of the capital that you have deployed into Maple. And so that's what not only enables that transparency, but enables that scale. And so we really are the only lender within that major subset of top 5 lenders, institutional lenders in the space, that operate on-chain properly. And leverage the benefits of smart contract infrastructure to facilitate the lending.
Yeah, I definitely think it's good to highlight. Today Maple basically is, it's kind of like the only like on-chain player in that like institutional lending space, pretty much. There's a couple others that are much smaller. So yeah, I think it's definitely good. Like you guys definitely should have more like insights, or like compared to most DeFi protocols, about this kind of stuff, because you guys are actually like plugged into that side of things, right? Able to see how these things change over time, how the risk appetite from institutions, and some of the people driving these flows changes like over the years. I mean, just a few years, like the whole landscape has shifted, right? Like Tether is now completely dominant. They weren't even like a top 3 lender, right? I think just like 2 or 3 years ago. So I guess, how do you see, like, we know how the lending landscape is today, but like, how do you see it evolving? Do you see it like picking up pace? Like in the next 1-2 years, can we see it, more towards the highs? Like, what do you expect for the institutional / like CeFi lending landscape in the next like 1 to 2 years?
Well, I think it's only going to drastically increase from here. And the big change from last cycle to this cycle is that the quality of institutions that are playing. And so you saw recently an announcement coming out that Goldman is going to start doing Bitcoin-backed lending. You've got Cantor Fitzgerald doing Bitcoin-backed lending. You've got the announcement yesterday about crypto assets having to be considered for mortgage loans. So like these are like people, like you read the announcement and then it just like washes over people's heads. But you got to like understand the significance of the amount of momentum and progress that has been made in pretty short periods of time. And so I think that what's going to start to evolve is the potential for more traditional players to start to come into crypto-backed lending and see it as being a not this big risky world that they're entering into. But here is an asset like Bitcoin that trades 24/7. It's like the best collateral asset that can exist on the planet versus doing stock lending or anything else like that, where you can have Bitcoin sitting in custody, available to trade 24/7, extremely liquid, and able to be liquidated at a moment's notice if it needs to be. And so I think you're just going to start to see more and more institutions playing in this realm, and Cantor was really the first to start this Bitcoin-backed lending advance, and I think that's only going to continue as more regulatory clarity comes in the US for more US capital markets activity overall.
Yeah, for sure. You touched on the crypto mortgage backed collateral for real estate. We're going to touch on that in a second as well. We also talked about Tether very briefly, but it's actually their main competitor, Circle, that we want to touch on as well. Very interesting things going on there. Circle's was trading near $300 on Monday. They IPO'd at $31, so that was less than a month ago. It's going absolutely astronomical. Why is Circle pumping so much?
As to why, I'm not sure, but Jeremy Allaire has come out to be a genius, and I use that word on purpose because the timing of everything has been perfect, right? You got the listing into the Genius Act announcement, and it's just ripped. Now, you can discuss valuations and it being a bit ridiculous and all of that kind of stuff, but and it will come back down to earth at some point, I would expect. But the thing for me that I think is most interesting here is that I would say, as long as I've been in crypto, people have always said that token valuations are always operating at a premium to public market stocks, and that there's like this. Crypto tokens are just like overpriced and it's ridiculous. And if they were publicly listed, they would never get these valuations. And what you're seeing here maybe for the first time is the inverse of that. It's like, oh shit, if I listed on the public stock market, maybe I'll get a better valuation than if I launched a token. And so I think it opens up now the floodgates for other crypto companies to list. I think you'll see Falcon X, you'll see Kraken, you'll see a few others that will follow, Gemini, and more we'll start to see this as a real liquidity event that they're able to realize on a pretty short-term horizon. Versus a year ago, none of this would have even been considered. Like the progress that we've made in a year, if you compare where we were, there's like no talk of stablecoin legislation or that getting passed. The idea of Circle being a publicly listed company would have been considered insane. And so it's amazing the amount of progress that we've made in 12 months.
Absolutely.
For sure. Yeah, I think it's like a bittersweet thing as well. It's like, yeah, it's like, I guess it's like inspiring for like you say the industry as a whole. Is also, it's like you don't really see many actual tokens ripping like that today. Definitely not like the big liquid ones. So it's like, damn, when can my token see that kind of price action? Yeah, it is getting pretty crazy. I think their Circle's net income is like 150 M, and then the actual net income that's like attributed to the common shares like 18 million. So yeah, I mean it's like on a PE basis, this is like 1,000 plus, 1,000x plus multiple. So it is pretty crazy, and yeah, I mean today like I, over the years too, like the listing requirements for tokens as well, like it increases too. So I mean, it's obviously nothing compared to the requirements to IPO. But yeah, maybe they're converging a little bit more over the years as the crypto exchanges have become more demanding maybe. And yeah, I mean, we're already seeing all these treasury companies, so clearly there's demand for maybe not new IPOs, but just taking some random company that already has IPO'd and then slapping plugging your token into it. So yeah, I definitely think Circle has also helped boost that interest and demand for these treasury companies also.
Yeah, it's a weird one, isn't it? How a lot of these sort of fan favorite DeFi protocols haven't quite seen that same effect like we've seen in Circle being reciprocated yet. But then, there's two ways of looking at it, right? Either all the money flowing into Circle, they just don't give a shit about trying to get on chain, or
That's what it
they,
is.
yeah. Or if you have a bit more sort of belief, or you want a bit of hopium get into your lungs, then like maybe it's just they don't know how to get on chain efficiently yet. Maybe there aren't people out there willing to show people how to easily get on chain, or the scars from the previous cycle still really put people off. Or maybe it gets to the point where people are only going to use these applications merely on the back end of things, and you log into your TradFi account or whatever, you claim this yield, but you won't know that you're using, I don't know, a Sky, an Aave, or a Syrah, or a Maple. So I don't know. It's a really tough one to try and ascertain just where it's heading.
Right. I mean, even in like if you're talking about like the market inefficiency, like it's not even just like a TradFi to crypto thing. It's like even within the public markets, yeah, it's already inefficient because you have Coinbase gets all the revenue from USDC on the Coinbase platform, which is a lot. I don't know exactly what percent, but it's a significant amount, and they get 50% of all the total USDC revenue. So now they've actually this probably won't last, but yeah, they're making more money from USDC than Circle themselves. And yeah. So even like within, so from that, you can probably deduce that this is like stable coin frenzy. It's like stable coin hype, basically, like from, I don't know, institutions or investors that, don't want to get super involved with crypto. But yeah, I mean, even within crypto, it's like, what is there a better bet than Circle? Actually, yeah, I guess you'll have XBL pretty soon. You'll have Plasma, but that's not. It's like it's obviously not as clear cut as Circle is, right? You know, how much USDT is going to be on Plasma, what kind of volumes are you going to see? Yeah, that token value accrual is definitely unclear. So yeah, I think that's definitely the gap that Circle fills. And it's like a different crowd as well. Like USDT is like very, like it excludes the US. That's like their whole thing. And then Circle is like a much more institutional kind of crowd. So yeah, I definitely think like you see all these news headlines. Like we've covered a bunch of them, like Stripe, Shopify, all these stuff, integrating stable coins. Like they're using USDC. They're not using USDT. So even though the ratio of USDC to USDT hasn't really meaningfully, gone up in the past several months, it's like like you can see this kind of like media like narrative feedback loop and how it can um, mostly just benefit the Circle stock. Like where else can that capital go?
Yeah.
Into
Yeah.
my bags. Like, come on, like we got to eat out here. But it's an interesting question, the way that you put it, especially with so many of these like good news narratives coming through. Like 4 years ago, if something like this had happened, people would have been like, you know, celebrating, opening the champagne over some of these things. Whereas now it's like either the people who would have really put money into it just aren't here anymore, or maybe it's just all that money's coming from these things like BlackRock, a lot more of these these money market funds, whatever, backed by treasuries. It's a really tricky one to try and figure out. I mean, as far as we know right now, like, things aren't changing that drastically. But normally, one thing I've found in this industry is that normally when these changes do come, they normally come at the time where like most people are just like so downtrodden and like grinded into the dirt that suddenly these things like happen, and then it's like a whole new wave of like narratives again. But it's just my own 2 cents on it.
For sure. Another big thing that's happening is the collateral thing, crypto mortgage, collateral. You can back uh, your mortgages with crypto pretty soon. Apparently, the director of the FHFA, Federal Housing Finance Agency, ordered credit companies Fannie Mae and Freddie Mac to prepare their businesses to count crypto as assets for mortgages. Very interesting news. I already have like a couple questions about how that's gonna impact things, but for what will be downstream consequences or interactions that we're going to see from this. For example, the first thing that comes to mind, what about crypto's typical volatility, right? Joe, what are your thoughts?
Well, the first thing that came to mind for me was it means that Darren's going to have a huge pad down in Miami now.
He's
Hey,
going to join
altcoin
you
derivatives,
stateside.
bro.
But I mean, I think overall it just speaks to the institutionalization of crypto assets overall, and them just being accepted as a more mainstream asset across the board, and especially within the US. I mean, you've got to remember that 6 months ago, none of this was possible. Crypto was just shunned by every institution, completely inaccessible. And on the back of Trump's election, is that all of this is now possible. And so, in this first 6 months post his him coming on board, you can see the amount of change, and it's starting to filter through. Right, it's not like you make these changes and everything happens overnight. It takes time for these guys to move and to put things in process. And so it just gives you an idea of the level of things that will happen over the course of the 4 years is going to continue to compound as the message that comes from the top starts to filter through all of the organizations that sit underneath it. And so I think this is only the start of crypto becoming a mainstream asset. And my only hope is that the accessibility, to your point before, Darren, is that it can keep up with the regulatory progress and the amount of interest that's going to be coming from a broader retail US market, and so that it isn't ledger devices and these other friction points that are going to be the reason that people don't come in, and that we can really evolve the space to make the most of this opportunity, ensuring that we don't let shit like meme coins dominate the narrative, and that we enable real products with real utility and real benefits for the US retail market to access whilst we've got this. And because what that sets up is making the most of this opportunity, and so that then it can never be considered again that crypto is not a mainstream asset. And so I think that's really an onus on all of the founders in the space, all of the protocols, and everyone that's operating within the US crypto ecosystem to ensure that we make the most of this opportunity. And so I just think it's super exciting. This is one of just many things that we'll be rolling out.
Right. You mentioned like the top-down approach. Yeah, I definitely think that's important. Even if Trump himself doesn't like he said he supports crypto, so it doesn't matter. Like sometimes you see him at these speaking events, it's like, okay, he's kind of just going with it. But yeah, it doesn't matter whether him personally doesn't understand all this stuff. Like he said, he supports it for his campaign, and that's what happens, right? Like, yeah, the top-down approach is what matters. Like if you have to choose between like Trump being pro crypto or like 20 senators being pro crypto, like you would choose Trump every time, because then yeah, it's like, I remember during the election, people were kind of like expressing this viewpoint of like how much can one dude, like you have all these checks and balances in the government, it's like how much can one dude actually get done? Well, it actually turns out like he can get a lot done because everyone wants to get promoted. You want to be in good standing. Or maybe if you're like the, the the previous SEC head, you're just like, all right, I don't want to play this game. He's too opposed to my principles, and then he just dips, and then he gets replaced with an SEC head that's actually, yeah, who's much more aligned with the yeah the vision involving crypto that Trump has set out. So I definitely think like things have happened it's pretty fast. Like it's not even 6 months yet, and you have stuff like this. Yeah, this definitely is like unthinkable in November. Um, these kind of measures, like it's almost bordering like too, like it's almost too bullish sometimes. Like some of the stuff, like you had the recent one. What was it? The Justin Sun thing, and Trump's kid. That's not Trump himself, right? It's his kid, um, acting as an advisor for the TRX IPO. So, but yeah, I mean, like it doesn't get better than crypto backing mortgages. Like that's insane. I mean, we'll see like the details around how, like, when it actually comes, when things are finalized, like how does this actually work? Like the Genius Act, yeah, you're the Genius Act or the Stable Act. Like it took a while, and like things are added, and so the initial drafts of these acts like is very different from what um actually like ends up on his desk and what comes into law. So yeah, it's kind of like complicated, and I definitely will be interested to see like what the actual like the actual requirements of this, because like surely yeah you can't just have like Fartcoin and then you buy a house. Like it's gonna, are they going to be like listing specific tokens, like just like two tokens, like stable coins, Bitcoin? So I'm curious to see these kind of stipulations, and yeah, like how, what the government greenlights and deems acceptable, and then what they don't.
It's weird. Part of me worries. No, go on, carry on, Joe.
On US politics too much, but and you can say many things about Trump, but he's not a like highly nuanced guy. Everything's pretty binary, right? It's either like I'm for crypto, I'm not for crypto, and so he's heavy for crypto, and then kind of everything just rolls from that. And yes, there's the legislation that's going to be passing, but then there's also the government agencies giving directions, and those are things that don't require law to pass. And these are the things that can actually move quickly when you get change in administration. And so I think these are the things that will actually start to come into effect much more quickly than the Stable Act, the Genius Act, that require Congress to pass it, and where you can get government agencies and bodies that are enforcing new things or enabling the release of previous rules that were in place. We've seen a lot of the overturn of the things that were put in place by the last administration being removed. I think that was kind of like the first 6 months, like get rid of all the shit that was put in place previously. And then now we start to see, all right, what are the new things that are pro crypto that we can start to roll out? And I think this is just the first of many.
For sure, for sure. And all I was going to say before is, I feel like with this sort of thing, it's such great news. But then at the same time, in our industry, we've seen our fair share of liquidation cascades and protocols having these like smart contract exploits. And I don't know how exactly like these mortgage things will work, but it's sort of like, imagine a world where people aren't really quite sure of like the mechanisms these things work, and like you just see people get absolutely carted out with like putting through some of these crypto as collateral for their mortgage. And like, there's the one side of me is like, it's so great to see, but then the other side of me is like, kind of gets a bit worried sometimes, even though at times I've been a massive degen myself. I'm just like imagining like some sort of exploit and loads of people losing collateral, but it's probably not going to be done that way. It'll probably be held in like some centralized authority, and these won't be like instant liquidations. But like imagine like they open up too many coins for people to use as collateral, or the fabled Fartcoin backed mortgage securities. Like who knows how far something like this actually goes, and what the second order effects of it are. But it's definitely new ground and newfound territory for the industry as a whole. We just sort of, I can't believe I'm actually saying this, but kind of have to preach a sense of caution in some respects, because the industry already got so damaged like over the last like 4 years. It'd be terrible for it to take any further damage from like just like poor risk management in this sense.
Hmm. And the way I read it is that it's not necessarily that they're going to be like posting crypto as collateral for their mortgages, but
Mhm.
more within the assessment of an individual applying for a mortgage, that crypto gets
Right.
taken into an account as part of their balance sheet. So previously they maybe have 10 Bitcoin on there, that gets discounted to zero. Now maybe they'll say, all right, there's a 50% haircut on all crypto assets, and so 5 of those Bitcoin would apply to that individual's application as part of their balance sheet. And so, which I think is appropriate, right? Like this is the legitimization of crypto assets. These things actually have value. But to your point, like they're not going to have, they have Filecoin on there, it's going to be zero. But having Bitcoin, ETH, Sol, then those are legitimate assets, and they should be considered as part of an individual's net worth.
Yeah, that's a great specification, I think, to kind of illustrate what it might look like, and it's a bit more nuanced than meme coins back, like meme coin backed mortgages or something like that. It won't quite happen like that. Um, I was wondering how this will impact well, crypto institutional lending, but Maple in specific. I was wondering also, and maybe you can cover that a little bit, like these institutions that you lend to, what type of organizations like are they? And I was specifically wondering, is there like anything real estate or mortgage related in there? But in a general sense, what do those institutions look like?
So all of the borrowers from Maple, think of them as the financial services institutions that sit around crypto. And so these are exchanges, market makers, trading firms, liquid funds, OTC desks, and then other lenders, specifically retail lenders. And so to your point, that last category is potentially where this has some crossover. And so you get retail lenders that are currently doing Bitcoin backed only lending that start to enter into mortgage lending overall. There's actually a couple of startups that have started pairing Bitcoin and home mortgages together. And so you obviously post your home as collateral, and then you can post some Bitcoin as collateral. And so it becomes a combined security package. And so I think that's where we'll start to see some evolution. And where we sit in the market is that we are an institutional lender, so we don't have any interest in lending to the end retail user, but we have the ability to provide wholesale finance, so larger capital allocations to these retail lenders that then go and face off against the smaller individuals. And so we're starting to do that more and more. And where that will evolve to is that we will start to get to what are called securitization facilities, which is just fancy language for saying where you bundle up a whole bunch of these loans and then you provide financing over the top of it. And that was where Maple started. Like, why that's Sid and I's background. That's why we came into the space overall, was to bring securitization into crypto. Now, we were just 6 years too early, and we're only now starting to get to where we can set up these facilities. But that's going to be the real next evolution of institutional lending, is when we can start to provide securitization warehouses and different structured debt facilities that will enable real professional investors to start to come in. Those types of structures are things that are going to enable more traditional capital to come into the space. And the fact that it's a Bitcoin backed loan versus a home mortgage will be indifferent to the institutional allocator, because they understand securitization, they understand the protections that are in place from a structure like that.
That's fascinating. All right, so we're going to see a lot more, professionalism on that front, and a trend towards that in the industry as a whole, and on this point specifically. Uh, would you say another front where we see this, or maybe it's not, is the treasury companies? So yeah, like the latest episode in this saga would be that the TRX one. So a TRX crypto treasury company has been announced. It's called SRM Entertainment. They have raised $100 million via equity sale to buy and stake TRX. And Justin Sun, we mentioned him earlier, is also serving as an advisor as well. Just the latest saga, but what what do you think? Is this part of that trend towards professionalism, or is it something else? And how will this shape the industry overall?
So many things can be true at the same time. And what I would say overall is I think overall it's a great thing, right? It's showing the legitimization that crypto assets becoming more legitimate, that actual publicly listed companies are holding these assets on their balance sheet. Uh, is it going to lead to some sort of blow up at some point in the future? Yes, I think that there will be repercussions for this type of activity. And I think the thing that would concern me more is that as we go down the risk asset curve, as it goes from being Bitcoin to ETH to Sol to TRX to other shit, then it's going to start to lead to that potential blow up being larger. And so I think that it's going to be good for a long period of time. Like I don't think it's like a massive risk at this point in the cycle, but I do think it will be one of the potential risks that needs to be managed overall that could lead to a blow up and lead to kind of the end of a crypto cycle. But I think we're still early on in this. And from Maple's perspective, we see this as a new borrower segment that we can allocate capital to. Where we can do Bitcoin-backed loans to publicly listed corporate treasury and provide liquidity on these assets. So I think Bolt maintains the premium assets and doesn't go too much down the risk. Then I think it's very, very good for the space overall. The stock speculation and other things is what's going to lead to some retail being blown out, and that's always the thing that concerns me, is being a setback for the industry overall when you start to let retail lose money.
Yeah, I think that's exactly what I was talking about earlier. When more vaguely just discussing the syrup token and like the Maple protocol itself as it's like a channel for some of these things. Like I didn't even think about the business of lending to these companies, because that's their whole thing. Like that's how can they put more crypto on their balance sheet? Like that's all they do now, I guess. So and access to capital is like one of the main ways, or it's one of the most important parts for these execs, I guess, at these companies. So I definitely would agree that some of these are like, you start seeing stuff about, I mean, TRX is like, I guess we might have given it a bad rap. Like TRX, like the actual token is pretty, like it definitely outperformed ETH by a lot. And it has a lot of users. So even though people don't like Justin Sun that much, but there definitely has been some weird ones. You had like the ASI, I think the treasury company is like a $7 million market cap. And then with DWF Labs, they announced like a $500 million plan, buyback plan. So stuff like that is like pretty crazy. So I definitely think it's it. But like if you want to capitalize on it, you start thinking about like, who are these intermediary players that can benefit from these things, whether they do very well or whether most of them don't do very well, and then a handful, stick around, like a strategy, like Meta Planet. I think it's definitely interesting to think about the lending side of that, crypto treasury vehicle side of things.
And the way you brought up that chart before of lending from last cycle into this cycle, I think an equivalent chart will be shown in 4 years' time of these public markets activity. And so I think it's a good thing to monitor is how much growth there is in this segment, if you want to call it that. I think it will be like something I'll watch closely as being a top signal. Is like when this starts to get to really ridiculous levels and you start to see really stupid stuff happening. I think that's like where there's a real potential unwind event.
Right. Well, what do you classify as like crazy in a public? Because you have Circle already. So like, what else has to happen for you to like for your mental model to shift to like, okay, this is it's getting a little frothy.
Well, I think because a lot of it at the moment is announcements as well, right? It's like, when is it actually translating from announcements into
Right. Okay.
actual acquisition of the capital? Because a lot of them have like undrawn facilities that they're able to tap. When does that translate into them actually acquiring the crypto, putting it on their balance sheet, and having this debt outstanding? And so I think there's been a lot of announcements more recently, but there hasn't been a lot of translation of those announcements into actual capital flows. And so I think it will be, I mean, I'm not going to put it together, but I'm sure, something for you guys to do, and is to look at the total amount of actual outstanding undrawn versus outstanding drawn, and then the amount of companies and total amount of the of crypto assets that have been purchased and held on balance sheet.
Yeah, we
debt back.
did touch on this over the weekend in our weekend markets newsletter. Not covering, the Treasury sector in its entirety. I mean, it's like massive now, but yes, some of the larger names. Yeah, it definitely like the ratio of actual crypto assets held on their balance sheet versus how much they intend to raise, how much they already have raised. Yeah, it is still low right now. I mean, you have some that have, I think, the hyper liquid one that already acquired like a pretty sizable amount of hype already. But yeah, a lot of these it's still untapped. So that I definitely agree. Like there is some, but then some of these you have to question, like how much, like is it actually going to come to fruition? Like some of these are actually pretty. You have to like start questioning if it's ever, are they actually going to buy 500M of the FET token, right? Stuff like that, like the Tron one, TRX, SBET. Like yeah, I think that'll definitely be buy pressure as well for these on the liquid token side of things. But then you also had like SBET. Yeah, there's the table. You had the SBET stock itself is not resemblant of MicroStrategy or MetaPlanet. It went down a lot in like a week. So yeah, I mean, I don't know how it plays out, like what the best way to capitalize on these is, but it definitely is pretty interesting.
And you can see there, just in a couple like DDC and Sol Strategies, the difference between capital raised and the amount of their holdings is still very significant.
Exactly. Yeah, and some of them haven't even finished raising. Yeah, it's just like they intend to raise, so they intend to raise, and then they have to actually raise, and then they have to actually deploy the capital, which could take some time because not all of them. It's not like Sailor where he's like just the dude doesn't care. It's like they actually have to, or they're incentivized to keep their fill prices low and acquire as much crypto assets per share as possible. So it could be like more extended time frames compared to strategy.
I mean, GameStop, they definitely kind of fumbled the bag in a way because, they raised so much and bought like a relatively small amount of Bitcoin compared to like other competitors out there. So like, I think there's definitely a distinction between everyone sees what Sailor's done and like people can say, oh, he just top blast, he has no clue, he's going to get liquidated. And like maybe that all comes true one day, but at least, at least he is not like GameStop, who, as far as I'm concerned, they are all fart and no poo because they've raised all this money and now they're saying Pokemon
they reneged, right?
And it's like this repetition where they had the mind share. They even tried to bring this Roaring Kitty guy back. He does one stream like a year ago and he's gone running off. So like, I definitely think for these companies doing this, like if they're not actually going to really go for it, then, it's just like a new trend. Your friend buys this new fashion trend and you see this cool new t-shirt he's wearing. You think, oh, I want to buy that as well. But then, if you don't actually end up buying it, you're not even participating in the trend. You're just like blowing hot air for no reason at all. And I'm sure that many of these companies who follow that path, it'll just be like You know, kind of like that meme that everyone puts all the meme coins on of like the chart that's like going circular, smaller and smaller and smaller and smaller. I think for the ones who don't execute properly, it's very likely that they'll easily follow a path like that. And it's people love the fact that these companies are raising money to buy our bags, but at the same time, like it does always make you beckon the question, you know, once these people stop buying or can't buy anymore, like will there be anyone left to buy? But then that's like the super bearish argument, you know, like the crypto evangelical argument is like, oh no, fiat currency is just weakening so much that everyone's trying to escape the collapse of paper money, and you know these guys are 10 steps ahead. But it's a weird one, you know, how it ends. I think you could reasonably guess either end of the spectrum. It ends in like terrible collapse, or people just like keep buying. Maybe the assets have matured enough that we don't see these terrible drawdowns. But that's definitely when I sit here myself saying that, I feel a bit of cope from
For sure.
previous cycles. So it's a
For
tough
sure.
question to try and figure out, in all honesty.
Yes, they'll have to deliver, and we'll have to see it come to fruition first. But that's for the future to see. We've done a lot of forward looking on this episode. Joe, you mentioned in passing a lot of announcements being made. I want to ask you to, or maybe you don't have an actual announcement, but maybe you can share with us a little bit about what's on the horizon for Maple before we wrap it up, and want to look forward to what's next for you guys for Q3.
Yeah, awesome. Yeah, no, first, great conversation, and thanks so much for having me on. In terms of Maple, so the first half of the year has been stellar for us. We started the year at 400 million um, and we set out at the start of the year, $1 and we've already in the mix of growth over the course of 2025. I think most people thought we were insane, and now most people think we're legit. And so we've grown that through our institutional business, but then majority, as I was talking about earlier, through Syrup USD, and that will continue to be our focus in Q3 and Q4. Is to expand Syrup USD's presence across the DeFi ecosystem. There's still so many people we can partner with, so many integrations that we can utilize that are really looking for a quality, consistent yield asset to be provided to their customers or to build financial primitives on top of. It especially comes on the back of the fact that the basis trade has been off for a significant period of time. So what is the standard risk-free rate across crypto, or the trade that most people like to run, has been off for a long period of time. And so now it means that people are starting to look to more diversified yield sources that still maintain quality and protection. And Maple is one of the few that's out there that provides that. So we're going to leverage that because we think that these sideways markets can continue for a period of time, heading at least through Q3. Then the final thing that I would add to that is then we'll look to be adding other DeFi assets. So we're running other products in our institutional business available to accredited investors only, where we kind of pilot new things, right? Sometimes we do Bitcoin yield, sometimes we do a structured product, and we see what works, what we like. And then once we're happy with something and it's being built out, we wrap it in a DeFi asset and we deploy it into DeFi. And now on the back of Syrup USD's success and the fact that it has all of these integrations, any assets that we choose to wrap in a DeFi asset and deploy into DeFi benefit from all of the groundwork of Syrup USD. All of these integrations, these new assets have from day one. And so that's where we're very, very particular about which assets we're going to choose to deploy into the DeFi ecosystem. But I think you can expect to see at least one more in the second half of this year that will probably have an even faster growth cycle than Syrup USD, because it isn't going from 0 to 1 like Syrup USD had to do. It's going to leverage all of the infrastructure and integrations that's already been built out. So stay tuned for that. And I'd say the other thing that will happen pretty soon is that we'll flip BlackRock and be the largest on-chain asset manager.
Oh, I love it.
Well, I'm looking forward to it.
Yes, competitive spirit.
I bookmark that.
Joe, that
What is BlackRock's AUM on chain?
Maybe 2.8 billion.
Oh, okay. It's not even that. Yeah, okay. That's not a crazy prediction at
It's
all.
not an outlandish thing. You don't have to like go and mark the headlines. Cryptocurrency.
well, they already feel you like in their neck, breathing in their neck. So that's good, man. That's an exciting time coming up for you guys. It's interesting how we've kind of went full circle because what you just
Literally.
described to me really illustrates that you have a very strategic vision when it comes to scaling. Like this idea that, okay, these integrations, these new products will have them from day one because you already laid the groundworks with syrup USD, right? That's definitely very, yeah, heartening to see. I love seeing that, when protocols and projects have a very strategic and thought through approach. So I commend you on that. um, Thank you for joining us. It's been an amazing chat, very insightful. Thank you to the audience as well. This was Market Cap, where funds, founders, and analysts provide their insights on the latest market developments to you, our audience of institutional investors and traders, as well as industry professionals. For reminders, you can check our daily Intel Telegram channel. You get news updates, you get updates when the show goes live, and you can, of course, join our next show. We're live every Thursday, 10 a.m. at Eastern Time, live on X and YouTube. See you on the next Market Cap.
Thank you guys.
Pleasure.